Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So as you can see, the performance that we've got on Monday totally contradicts the scenario that we agreed to keep an eye on in the weekend. So we said due to this performance on Friday it might be stronger upward action, and we have agreed to keep an eye on support areas on intraday charts to see how market will respond and to control that these levels should hold. So market should not break it, just because breakout of these levels totally destroys the bullish context. And actually this has happened very fast, mostly on the background of rising anticipation of the greater rate change by the Fed. So if even the weekend when we talked about markets, common opinion and general expectation was about half of a percent, now this Wall Street Journal tells this might be 75 basis points. It seems logical, but it will not help in general to control the inflation, but rising more active interest rates seems logical. What we have from the technical point of view? From the technical point of view, we are not considering anymore the taking new long position here by far on the gold market, by many reasons. First of all, the market mechanics of the bullish market, bullish performance has been broken. Why? Because take a look here, we have some kind of the widening triangle is forming here. But if you'll take a look at the performance, so initially we were considering this ABCD pattern as market hits the COP, but with this drop lower, market taken out of the C point, so the ABCD pattern has been erased. Yes, of course, we could suggest maybe this new ABCD with this A, B, C, bottom, right, D pattern, but here we have few nuances. First of all, the daily trend has turned bearish, so on weekend it was bullish. Currently, the new trend on daily chart stands bearish, and we do not have any bullish directional patterns, which means that we have the bearish context on the daily chart. Besides, on high time frames, on the weekly, on the monthly chart, we also have the bearish trend. Second is the scale of this drop. So this is nasty black candle that's just engulfs everything that was stands to the left and showing the tail closing. This is not occasional performance. On the 10-year yield, we have 3.5 targets completed on the monthly chart. Yes, 10-year yield slightly overextended. We could expect some flat action or even minor pullback, but overall performance stands outstanding. So short-term interest rate stands around 2%. It now exceeds the dividend yield on the stock market. Stock market collapsed. Bitcoin collapsed. Actually, if you're watching our Bitcoin videos, the both targets that we discussed yesterday already has been completed. So 21 target also has been touched. So from that standpoint, in the current new environment, since market was not able to keep bullish context and actually hasn't given us even a chance to take the long positions because collapse was really very fast, we're considering taking the short position, guys. And here's a situation very similar to the euro currency. As on the euro currency, as on the Great British Pound, we see the same downside acceleration. And from that standpoint, we are just watching for resistance levels where we could consider taking the short position. So on the hourly chart, the most probable area that makes sense to consider is around 1840. It's right here, because this is confidence level. This is also some previous lows stand, and very probable that if market turns down, this probably could happen right from this area. So 1840 is the first area to keep an eye on. Actually, this is confidence 35, 39. Besides, second moment is that if we take a look at our sideways action that we discussed, you can see this absolutely, also irrational performance from the bullish point of view. while in this market showing the wash and rinse of these lows, showing rally right to the top. Next day rally has been totally erased and market dropped out of the consolidation. This is bad sign, and from that standpoint now we need to calculate the downside target instead, which stands approximately around the lows of the 1785. So if market will go with this bearish scenario, the first target that we need to consider is the previous lows. So that's what we have currently on the gold. Finally, I would like to show you the same cover of the Economist journal that I have shown in today's video on Euro. So here you could see this is for September, guys. As you know, concerning this coverage of the Economist, so people suggest in the market society suggest that Economist hides in the covering some prophecies, so concerning the financial markets, and that was in September. So you can see the big hole where the different assets are dropping. So we know that Luna already is there. Next comes Ethereum, Bitcoin. Here's probably Tether, just because article dedicated to the decentralized finance. So I would suggest that this is not the dollar, this is probably some stable coins. Next one is coming stock market. Then here you could see the sign of the US Treasury, and finally this is the Fed. So there's really big events ahead, as you understand, and everything actually we're discussing week by week in our weekly reports. So we already talked about the really big difficulties in the bond market. Stock market we already talked about this. So we expect 2.5 thousand on the S&P index in the medium term and levels below the 2000 in the longer term. Bond market probably collapsed as well, just because nobody buys United States bonds right now, and Fed and Treasury has no really tools to finance the rising deficit that it has in the budget, and it can't finance the repayment of the debt with the new issues because nobody buys it. So this is big event stands ahead. What is really good moment here in this picture that we do not have here, the gold market. So that's what we have currently, and it means that maybe even indirectly it points that maybe our suggestion is correct, that when the collapse will be over, investors understand what is going on, demand on the gold will rise. We expect the rising of the gold 2 times to the 3000 level at least. So and now we just need to wait for good entry level, and when this turning point will happen.